right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I got a ask from, or an ask. Yeah, that's exactly what I got. I got asked a question. I got a question that Patrick asked me about the Swiss franc. He goes, "Hey, why'd you close out the dollar Swiss?" And I took a loss on that, by the way. Remember I had the short dollars or short dollar yen and long dollar Swiss, excuse me, as a hedge. And I took the dollar Swiss off as a loss. I took 2/3 of the dollar yen as a gain, which basically ended up being a wash. But the reason why I took the dollar Swiss off is because if you look at the Euro Swiss is actually showing some signs of weakness. The Swiss franc is actually showing some strength, even in the face of negative rates. And I'll tell you, if things go awry in Greece, near term, the Swiss is probably going to strengthen because people will say, listen, I don't care if I get penalized for holding my money where it's safe, as long as it's safe. Could be worse. I could own the euro and the euro lose 20% of its value because of what's happening in Greece, or I can buy the Swiss franc and I get penalized 0.75% for holding it. I'd rather, but still it'd be safe. I'd rather do that and possibly even see some appreciation of the Swiss franc. So in the near term, if things happen that is not conducive to a market rally because of Europe, the Swiss franc will strengthen temporarily. And I think we're seeing it in the Euro Swiss. I think the fears that are mounting in Greece are easily displayed in the Euro Swiss. I mean, you look at it, it's like, damn, man, that thing cannot catch a bid. Here we go. Here's the Euro Swiss. However, if things are patchwork together, I do want to buy the dollar Swiss again. I'm a little worried about this next week, and I'd rather just not have the exposure. So, Patrick, that was a great question, and it was. I hope that answer made sense to you. Okay, let's talk about. Let's get these majors done. So let's go with the euro dollar. So the euro dollar, obviously, we're rejecting at 109 still. Okay, we're still having a problem with this 109 level. Yesterday we drew this, right? We were here. We said, hey, if we go up to 109 and we bounce off of there, it's going to be a good short. I actually shorted it yesterday at 108.91. I covered it at 109.70 or 10. I'm sorry. I shorted at 108.91 and I covered at 108.70 or 69. I can't remember. Somewhere around there. I did play it back to the short side, but that was it. Hopefully some of you guys got to play that yesterday too. Now the question is, will we break 109 today? On a weaker jobs report, I'm assuming we will. The question is, how far are we going to go? So let's delete everything here. I'm going to delete it all. We can always redraw everything. So I do believe we are in a currently 110 and change range. Okay, to a 105 range. I believe this is what we're dealing with currently. Now, if we rally today through 109, where are we going to go? The 109.80 seems very logical to me. I try to be logical in my analysis. Why? It's going to be a thin market. Liquidity is going to be pretty crappy. Okay, so if we have a weak jobs number, we're probably going to bust right through here. We're going to take out the stops above those highs, right? Because you got your shorts right now that are like, well, I'm just going to short the euro here at 109. I'll put my stops above that resistance. They're going to get stopped out. And then once they get stopped out, they'll probably reverse. Remember, if you're in a range, you think about the psychology in a range. Okay, this is how range trading works, and I'll explain it to you. When you're in a range, what happens is, and let me grab my pen. You got traders like me who think I'm a little smarter than you, and you got traders like you that think you're a little smarter than me, and a little smarter than the next guy and the next gal, and you know what I mean. It's that type of thing, that type of thinking. You're like, okay, all right, all right. So we're in this big range. The range is between 110.50 and 105. So when we get up here towards 110.50, I know there's going to be people trying to short it up here. So instead of them, if they're going to try to short up here, I'm going to be smarter than them. I'm going to put in my order right here, and I'm going to get short before them, because the game is me before you. That's what this game's all about. It's me before you. Well, and then the person next to you is like, well, people are going to look to sell up here, and I know there's going to be people trying to short here, and then there's going to be people trying to undercut them here. So I'm going to try to short right here. And so what happens is you get all these orders stacked. So as you come up towards resistance, you hit, pop, 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 and it eventually stalls the price, and then it comes back down, right? So it heads down towards support, and then all of a sudden you got people going, well, I don't think we're going to break 105, so I'm going to try to buy right here before 105. And then you got people saying, well, I'm smarter than that guy. I'm going to try to, oh, I'm smarter than that person. And so bop, 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 bop. And so now you hit, support before 105. And what you end up doing is you end up creating a, over time, what happens is ranges turn into triangles, and that's how you get tighter consolidations, and then eventually break out, usually in the direction of the trend. All right. So if we're just trying to think about what other traders are doing here, as we approach this 786 retracement, that's probably where you're going to find a lot of sellers. Now you have to think about that. That's at 109.80. We're at 108.80. Is it possible that we move 100 pips higher today? Absolutely. Absolutely. We have a bad jobs number in thin liquidity. We'll be sitting up there pretty quick. But man, if we can get to 109.80, I'm going to be a seller up there, personally. Okay. Support. So let's say it's a great number, because no one's expecting a good number. I mean, I know you know it. I know it. No one's expecting a good number. That's why the dollar weakened yesterday. It was ahead of today's data. No one wanted to be long the dollar. So let's say it's a good number. I mean, you go look at that the continuous gains and jobs. I mean, no one's expecting a good number. And how about if the U.S. economy pulls another hat trick? We see a strong jobs report. If that's the case, then we're going to see probably 108 real quick. Okay, 108 would be support, because that was a breakout point. Remember, that was previous support from yesterday. So you can see, I'm sorry, previous resistance, which is current support. So if we make it, and notice again, before a big number, usually what happens? We get mid-range. If resistance is here and support is here, we are mid-range, thereabouts, right? Okay. 108. Let's go over to the cable. So the pound is in a really tight range. The debates last night didn't have any influence in the cable, and we're currently, we've taken out that downtrend line, but there's been no follow through, so it becomes irrelevant. So what happens is we're really just stuck between this 148.70 and 147.50, and guys, I'm telling you, the cable looks like a good breakout candidate today. We're in a super tight range. Again, this is a perfect example of what I was just discussing. Perfect example about range trading. Well, we're in this range here, so I'm going to be smarter than this guy, so I'm going to short here. and got all these orders stacked here. We know that we have a range down here, so everybody's trying to buy on the dip in front of the next guy. Then we do it again, just a little bit lower low, and see how we tighten into a. Do you guys see that? That's an exact representation of the example I was giving you in the euro dollar. It happened in the cable. Okay, that's how we tighten in these ranges. So now, the risk for the cable is that now we have the possibility of a breakout, above 148.75 and below 147.50. Right? 75. Yeah. Okay. All right, let's go into the Swissy. And the Swissy. So yeah, I'm a little bummed out. I got out of the Swissy. I got out, near these levels yesterday, somewhere around here. I'm a little bummed out that I got out of it because I know that the Swissy is going to be one of those currency pairs 6 months down the road. I'm going to probably look back and say, damn, I should not have sold the Swissy down there. But the near-term risks outweigh the longer-term rewards. And the near-term risk is the proverbial poop hits the fan with Greece in the next week. And I don't think I want that exposure. It's too risky ahead of there. Okay. So a Swissy. Key support coming into play. Let's delete all this stuff really quick. We can redraw. All right. So first and foremost, let's take this. This is trend low. Okay. So really support's coming in right through here, 95.50. If we have a bad jobs number, I'm assuming we're going to take out that support at 95.50. Okay. We take out 95.50, we're going to test 95. So I have to put down both those numbers because remember, the 95 is going to be a major support, and then 0.9550. Is that right? Yeah, 9550. Decimal points in the right spot. The problem that the Swiss has right now is, like I said, if you're an institution, the question is this: do I own the euro right now? I need European exposure. Do I own the euro right now and risk losing the euro losing 10, 15, 20% of its value over the course of the next 6 months? Or do I pay interest at 0.75% over the course of the next 6 months? I'm going to take a loss either way. But I also have the potential for, currency appreciation by holding the Swiss franc too. Or do I take the risk and risk the possibility of losing a lot more holding the euro dollar if things go, belly up in Greece? Okay, so that's why the Swiss, I'm a little concerned with it right now. Now and I think a lot of, you can obviously see it too. This is just over the course of the last couple of weeks, and things are starting to get down to the wire with Greece. Okay, where are we going to be capped rally wise? It's hard to say. Really, really hard to say. On a strong number, if the Swissy rallies, that comes in 96.10. I mean, these this should offer some pretty good resistance on the way back up. Because if you think about people that are stuck long up here, at the 97 cent level, they're probably like, man, if we get anywhere near this 96.50, I'll let some go. So, all right, we are in a range environment. Let's go over to the dollar yen. So, like the dollar yen, I know we've already done analysis in the dollar yen briefly a little earlier, but here's the dollar yen resistance. It comes in at 2015. Okay, that is a key level of resistance from a trend line perspective, because that's a game changer for me. If we break 120.15, I have to get out of my dollar yen short. There's no if and or buts about it. I probably will close the rest of my yen pairs too, like the Aussie yen, New Zealand yen, Euro yen. I'm not going to hang around. If there's the potential that the dollar yen is going to head back up towards 122, I don't want to be around. Okay, with yen longs. So while we're below 2015, that keeps me in the bearish camp. Okay, it's key resistance. Support is critical down here at 1940, or well, I mean we're basically here. What the hell just happened? Wow, the euro's spiking up. The dollar's spiking down. Hold on. Uh-oh. What happened? There's a little dollar flush. Dollar just moved. Hold on. The euro just tripped stops, I think. Look at that. Here is illiquid markets at its finest right now. The hell happened there? And it's going to spike right back down again. What the heck? Nice. What the heck was that all about? Okay. Look at that. Yeah, I mean this is a illiquidity at its finest, guys. So the dollar yen, as I was talking, because I was watching the dollar yen, I'm like, what the hell just happened there? I mean, we almost came right down to support. Support is at 119.40. Period. Okay, 119.40. Let's see here. I mean, boy, I have to tell you, people are expecting a weak jobs number. No doubt about it. All right. So we're in a range environment right now. But if we break this 119.40, going into the dollar yen, I mean, that probably will be a pretty big. We could challenge 119 pretty quick. So I'm gonna be right here. Gotta write that down. Okay. All right. There we go. 119, 119.40. We are in a range environment. Let's go to the dollar Canadian. So the dollar Canadian just flushed through the 618. We just broke through that support. So when we bounced off of this yesterday, we bounced off of the 618, gave us a move back up to 126 real quick. You can see how it happened really fast. We came right back down again. So that flag pattern is nullified, and we are still in a big range here. So let's take the 4-hour chart. I like the positioning ahead of non-farm payroll, the big flushing of the markets. You can just hear it. Okay, so here we are again, range trading up to 128. And you know, again, here this is probably very, very. You can see exactly what's happening here, right? Probably looks something. It's probably going to end up looking like something like this, realistically. Oops, I wanted to grab the blue line. Probably going to be something like this moving forward in the Canadian. All right. So with that being said, here's your hourly. We just went through the 618. So the 786 comes in at 124.87, 124.75 to the spike low. That's probably not a bad place to be on the long side of the dollar Canadian. Okay. So let's do a couple of things really fast with this Canadian. That means key resistance is right here. Support is right here. So resistance at 125.75, 124.75. We're, believe it or not, we're in a big freaking range, guys. Look at that range. Big range since January. Okay. Let's go into the Kiwi. So here's the Kiwi. The Kiwi, just extend that channel. It's just channel. Okay. 618 held. That's obviously, that was support, which is key support now. Let's get rid of this really fast. Let me remove that. Let's remove this. Oh, hold on one second. Okay. Nice spike up in the euro. It's probably going to just reverse all of that too. 50% retracement. It's holding us thus far. Um, Probably right in the resistance here anyway. Okay, we have to imagine that we're going to break through this resistance. We're facing resistance right now, but we have to imagine that we're going to break through in the Kiwi. Okay, so where does that take us from here? 75.80 is going to be probably some pretty decent. It's horizontal spike. There's a lot of spikes through there. So that's probably going to be some pretty decent resistance today. Let's see, let's go into support. Hold on really fast. This comes in at 74.85. You can see that spike low here, spike high, resistance through here. So I'll just call it 74.80. Okay. When we come back, we're going to do the Aussie dollar index, do the Nordic currencies. We'll take a look at the peso too. I'll be right back. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to finish up with the Aussie and a couple of these other pairs too really quick. So let's go into the Aussie dollar. And there's the Aussie. Okay, so the Aussie took out the downtrend line. Let's go ahead and remove that. That was like resistance. We were looking at it yesterday afternoon, and it held up until this last hour. We see a little bit of dollar weakness coming through ahead of non-farm payroll. Like I said, people are expecting a weak number. Yeah, and I think that's very much the case. So we're at the lower end of our range with the Aussie, okay? And you can see we punctured through 5-year lows yesterday, bounced back up. Remember, next week, Aussie faces some pretty big challenges with the a potential of a rate cut. I think last polling I saw was 16 out of 26 analysts do not expect a rate cut. So that means a minority does. However, the risks are still out there, obviously. But from right now, it seems like we are in recovery mode. So at this point, but again, a lot of that depends on what happens with the jobs report today. So the 38% retracement comes in at 76.60. Okay, 76.60 is a realistic objective today, and it's going to be a very tough resistance level today on continued dollar weakness. You have to think about this too. This is another thing to think about. In the event, okay, in the event we have a weak jobs report, if the U.S. equity markets come under pressure because it's weak, okay, you have to keep an eye on not only the Aussie dollar but the Aussie yen, because if the Aussie yen does break through 90 yen, not only will you have dollar yen weakness, but you'll have Aussie dollar weakness at the same time. That would create a very big downdraft in the Aussie yen, because when you break a 6-year trend line, well, it's probably going to weigh on the Aussie dollar as well. So think about key resistance coming in at 76.50 or 76.60. It's a spike high here. 63. Spike high is here, 62. So resistance 0.7665. Key resistance. Okay. We were bearish yesterday, coming down into the my charts. Thanks, guys. Sorry about that. Okay. So let me redo the Aussie. I thought I had to unpause the screen. Thank you. Thank you all. Appreciate it. Appreciate the heads up. Thank you, Maria, Kelly, everybody else that's yammering at me. But you guys got a hold of me via Twitter, which is good, because I had my hidden the questions, the Q&A panel. So you guys ping me via Twitter, which is good. Okay. All right. So going back into the Aussie dollar. So here we are at the 24% retracement, 38% retracement, spike high, resistance. That is key. Okay. So yesterday we were bearish coming into the trend, but we could not hold the lows. Like I said, I'm short right here. I'm short at 08. Okay. And I'm holding it right now. I am expecting a move back up to 76.60. I'm prepared for that move. I told Chris and Maria in the chat room yesterday, I'm like, you have to, if you're going to short small size down here, you got to expect some volatility. The thing that worries me the most is the false breakdown that we had yesterday when we went to 9-year lows and then, or 5-6 year lows and then, bounced. Okay, that is concerning. 76.60 is resistance. Support again is 75.50. Let's go to the dollar index. Okay, so here's the dollar index. See how we're pushing right down towards support here. Let's this chart brings up a really good point. So yesterday, I sent out a tweet. I had someone that sent out a chart to somebody else, and I know he was on the webinar yesterday, and he does this quite often, is he sends out the same charts that I talk about in the morning, but doesn't credit me. And I used to think it was more of a compliment than anything, but now it's really quite annoying. So, listen, they're charts and stuff, but when I hope that you guys benefit from my analysis trading wise, but I hope you don't use it, my analysis, you try to replicate it. Don't credit me. Go somewhere else and try to gain exposure based on analysis that you saw here, because first of all, that's not right, and second of all, it makes you look like an idiot, because most of the people that follow anybody else follows me, and they've watched the analysis here. Okay, so I'm just saying, it was very, very hurtful to me yesterday. I was like, if this is going to be a symmetrical triangle, anyway, I don't need to talk about that. And I'm not, and push me a little further, and I'm going to start publicly humiliating people, which I don't want to do, because I don't want to stoop to that level, but I will. Okay. Hold on really quick. All right. If you heard that, what was happening in the background? No mind. Okay. So symmetry. That might actually be more symmetrical than this. Having the flexibility of redrawing trend lines is kind of what we do as traders, trend lines, analysis, whatnot. Okay. All right. Jay says that's plagiarism. It is plagiarism, very much so. It's probably the same person that used to write a report or an essay and just copied right out of the dictionary. And they think it's okay. It's not. Anyway, right now we're at a 618 retracement. Ashley says give them a good internet slapping. I could. Excuse me 1 second. Okay, I'm back. Anyway, here's the dollar index. Okay, we are approaching the 618. Probably going to have a little bit better support coming through. Hold on really quick. I'm going to do a little bit more analysis here. Okay, just as we kind of drill into this 1 hour chart. So 97, probably going to offer some support. The euro's coming right back down again. By the way, the euro's looking like it's going to dip right back below 109 again. Okay. 97 is probably going to be supporting the dollar index for now. 97, and below that, 96.81. Okay. Er, Randall says that dollar index is winding up. It is, man. It's really tightening here. Um, I'm just trying to think if we get a strong number here, that's going to offer us some really, really good resistance today. That comes in at 98. Whoops, damn it, I always do that. We have a spike low, spike low, spike high. Come in a triangle resistance, 98. We're in a range, and man, that apex is tightening, isn't it? It is tightening. Okay. So David says, hey, it's not okay to take credit for your work, but take it as a great honor that your insight is so appealing to someone that they try to make others think that they are smart. What goes around comes around. They will reap what they sow. Yeah, because what's more offensive is this person goes and tweets another guy who does does webinars too, and it's like, dude, you're trying to get this guy's attention to get on his webinars using my work, and you've been doing it for a long time. And the dude and I have talked about it already, and he is very well aware, which is funny all at the same time. All right. The dude that runs the other webinar. We've already talked about it. Okay. So, and we've been aware for a good year now. Here's the US dollar Swedish krona. US dollar Swedish krona is sitting on some really key resistance. Now, also keep in mind that we're at a big 127% extension on a yearly basis, monthly basis. I mean, the craziest thing about the dollar Swedish krona, in my view, is it hasn't pulled back. That is the craziest thing about the dollar Swedish krona. I thought for sure that with the euro bouncing, this thing was going to pull back. Okay. And it hasn't. Now, that's not to say it won't. I'm just saying I'm particularly impressed that it hasn't. Below 850, we're probably going to start seeing a substantial pullback, and I know everybody's waiting for it. And if we have a bad number today, maybe we do take it out. And if we do, it's probably going to be a really good short too. Okay. Okay. Now the flip side is, shoot, if we have a good number, we're just going to take out this 870 and just we're at 860. We're in the middle of this triangle, which is typically a continuation pattern. But okay, 870, and I mean, this is actually still bullish. Look how bullish this chart is. We're back to mid-range on relative strength. Rawl asked, "Who is the dude?" I won't go there, Rawl. Or I try not to bash people unless it's Keith McCullough or Peter Schiff. However, I'm getting pushed to my limits. So if you're listening in, that comes as a warning before I start making you look really silly out in the internet world. Okay. Yeah, don't mistake my niceness for weakness. Big mistake. Um, okay, let's see here. I think we should leave the Norwegian krona alone right now. It's not as set up as the Norwegian krona, or as excuse me, as the Swedish krona. Um, Here's the peso. Hmm. This is a this is one of my contrarian indicators. This is his big call long right here. It's getting is not looking as good right now. Yeah, I'm gonna leave this one away. Oh, this one too. All right, we got just about 13 minutes to non-farm. To take a real quick review, S&P futures just went back to positive. Um, Dow futures are down 4 points. Uh, Gold's closed, or the gold market's closed. Crude market's closed as well. Um, let's see here. Everything else is pretty quiet. Let's take a look at the S&P futures really quick. See where we're at ahead of the numbers. Yeah, this 2060. Hmm. I don't know how the market's going to react here. I don't think anybody does. You know. All right. Well, guys, so check it out. I'm going to put you on break for just about 5 minutes. I'm going to come back 5 minutes before the news. So I'm going to come back in 5 minutes from now. And then let's get ready for non-farm. Don't go anywhere.